What's up everyone, it's Cody here. I've been asked by one of my subscribers about how I look at a company stock to decide whether I should invest in this stock. So in this video, I will share with you how to step-by-step analyze the stock from a fundamental analysis standpoint. Since many of you might be considering buying some Boeing stock, I will start with qualitative aspect and move into the quantitative aspect of fundamental analysis. I will also give you a conclusion at the end of the video whether I will personally buy some Boeing stock. So if you want to know, remember to stay until the end. At any point of the video, if you feel like you learned something, don't forget to smash the like button. Also, if you want to see more of this type of video, don't forget to subscribe to this channel, click the notification bell next to it and change it to all, so you'll never miss any video. Now let's get right at it. Boeing's rival Airbus in particular offer competitive products and have access to most of the same customer and suppliers. Also, Airbus passed Boeing as the world's biggest airplane maker in 2019, while Boeing is still struggling to recover from the 737 MAX crisis. So there you have it, Boeing is the past and Airbus taking over from 2019. I've given you the fundamental analysis in just 1 minute. Just kidding. However, I will compare Boeing with Airbus throughout this video to put the fierce competition into perspective. So what is fundamental analysis? Fundamental analysis attempts to determine the value of the company. This value is often known as intrinsic value. Over the long term, a stock price will reflect the company's intrinsic value. A combination of this data can help you determine if the stock is undervalued or overvalued, and the potential future value of the stock. Let's start with qualitative side of fundamental analysis. Qualitative analysis uses non-mathematical study to help investors make investment decisions. I'll first start by understanding Boeing's business. Boeing operates in 4 reportable segments. Number 1, commercial airplanes. Boeing's main industry is the manufacturing of commercial aircraft, where it is the leading company in the world. The company has more than 10,000 commercial jet lines worldwide. Number 2, defense, space, and security. Under of its business unit is the design, production, and provision of service and support for military, satellite, human space exploration, and autonomous system industry. Its primary customer is United States Department of Defense, and revenue from this alone accounts for approximately 84% of its 2019 revenue. Number 3, global service segment. The after-sales service for fleets around the world is also part of its offer, regardless of who is the original manufacturer of the equipment. Its strength in the experience in engineering, digital analytics, supply chain, and training for both government area and commercial service. Number 4, Boeing Capital. Boeing Capital seeks to ensure that Boeing's customers have the financing they need to buy and take delivery of their Boeing product and manage overall financing exposure. And once I understand the main business of Boeing, I will dig into the competition section. The reason why I'm looking at the competition is because of the economical moat. The term economical moat, popularized by Warren Buffett, refers to a business ability to maintain competitive advantage over its competitor in order to protect its long-term profit and market share from competing firms. As Warren Buffett puts it, we're trying to find a business with a wild and long-lasting moat around it, protecting the terrific economical castle with the honest and lord in charge of the castle. Coming back to Boeing, I will extract key messages directly from Boeing's 2019 annual report, so you don't have to read it yourself and save the time to smash a like button for me if you haven't done so already. The commercial jet aircraft market and the airline industry remains extremely competitive. We face aggressive international competitors who are intent on increasing their market share, such as Airbus and other entrants from Russia, China, and Japan. We are focused on improving our processes and continue cost reduction efforts. BDS, which is defense, space, and security sector, face strong competition in all market segments. In addition, certain competitors have occasionally formed teams with other competitors to address specific consumer requirements. BDS expects the trend of strong competition to continue in 2020. BGS, which is the global service segment, expects the market to maintain highly competitive in 2020 and intends to grow market shares by leveraging a high level of customer satisfaction and productivity. It seems like Boeing will continue to face fierce competition in commercial airplanes and defense, space, and security as the competitors are expanding their presence worldwide. And the advantage that will help Boeing grow is their high level of customer satisfaction and productivity. Now that we understand Boeing's business and its competition, let's get into the quantitative analysis of fundamentals. For analyzing the number, we can have a better idea whether Boeing is really the past or Boeing will recover from its 5-year low stock price. I usually start by looking at the company's income statement. Investors and analysts pay particular attention to them for signs of any change from quarter to quarter or year to year. The goal of the income statement is to determine how much money does the company take home at the end of the day. And just like running any business, we'll obtain a net income by subtracting all the expense from its revenue. Boeing's revenue, often expressed as a company's top line, has been gradually increasing between 2016 and 2018. We saw a sharp drop in 2019. The sharp drop in revenue was due to the continued worldwide grounding of Boeing's 737 MAX jet and a production halt this year in the wake of 2 fatal crashes. And top line only indicates how effective a company is at generating sales and revenue. On the other hand, the bottom line is the company's net income. It describes how efficient a company is with its spending and managing its operating costs. Boeing has been steadily increasing its net income before 2019. When Boeing's 2019 revenue decreased due to less orders, the expense of running the business stayed almost the same. Therefore, the net income took a huge toll into a negative territory. Let's compare Boeing's income statement with its biggest competitor, Airbus. Airbus' top-line revenue has been relatively stable and growing without the dip in 2019. However, the bottom line net income has also dipped into a negative in 2019 due to the fact that Airbus was hit by a 3.6 billion euro in penalty related to a corruption probe settlement. Now that we understand the basics of income statement, we look at another important factor of the fundamental analysis, which is the balance sheet. A simple balance sheet is like a snapshot of a company's overall financial health. It shows the asset, liability, and equity of the company. This brings us to a simple balance sheet equation. Asset equal equity plus liabilities. In asset, a company will show all the equipment, building, and vehicles as also cash and account receivable. The equity is the value of shares issued by a company. Liabilities show what companies owe to other parties. This usually includes trade debt, short-term and long-term loans. Based on the balance between asset on one side and owner's equity with liability on the opposite side, you can get a rough sense of valuation of a company. Another important factor to determine a company's short-term financial health is current ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligation, or those due within 1 year by comparing a company's current asset to its current liability. A current ratio that is in line with industry average or slightly higher is generally considered acceptable. A current ratio that is lower than an industry average might indicate a high risk of distress or default. As we can see, Boeing's current ratio is 1.05. A current ratio greater than 1 indicates Boeing has the financial resources to maintain solvent in the short term. However, it's alarming to see that Boeing's current ratio is ranked lower than 76% of 235 companies in aerospace and defense industry. What about Airbus? Airbus is not doing any better with the current ratio of 0.91. A company with a current ratio of less than 1 does not have the capital on hand to meet its short-term obligation. It might seem like Boeing is shoulder to shoulder with its biggest competitor, Airbus. And after examining the fundamental of Boeing stock, I can finally answer the key question of whether I'll be buying Boeing stock now. To this day, Boeing 737 MAX are still grounded, and US airlines have taken the jet off their schedule well into 2020. And the coronavirus is hitting the global air traffic, depressing already weakened demand. To help with liquidity, Boeing has recently drawn down a $14 billion loan and saw $60 billion in government aid. The company ended the first quarter with $15.5 billion in cash. $15.5 billion is not much when Boeing's current liability is at $97 billion. So this really means that Boeing is desperately scraping up money to meet the short-term obligation. Boeing has also recently suspended its dividend on March 20. To put that into perspective for you, Boeing has been paying cash dividend on common stocks every year since 1942. From the technical analysis standpoint, shares fell to the lowest level in 7 years in early March. Despite the rebound, Boeing stock is still well below their 50-day and 200-day moving average. Therefore, I would suggest investors who are looking for good quality stocks to buy can find companies with stronger, more consistent earnings growth and better stock technicals. I only have the time in this video to quickly scratch the surface of fundamental analysis, so if you would like to learn more in detail, let me know in the comment section below, and I do read and reply to most of the comments. Also, if you'd like to learn how to invest at Warren Buffett in 10 minutes for free, don't forget to check out the link in the description. If you like this video, don't forget to smash the like button, subscribe, and click the notification bell and change it to all so you don't miss any video. If this is your first time on my channel is share about stock investing, personal finance, and real estate investing on a weekly basis. You can also follow me on Instagram. See you next time.